All right, are we good? YouTube, if you guys can see me, YouTube, welcome. YouTube, if you guys can see me or you guys can hear me, please make sure to put something in the chat. Let me know that you're alive. Let me know that we have some movement. He said, thanks for doing this. It's no problem, guys. I'll be completely honest. Like there's almost no solid information. Well, really for Forex traders, there's no solid information when it comes to fundamentals. And so I think that we have an obligation here, like because I have a very solid understanding of fundamentals, we kind of have the pieces together of what's going to happen on these big news days. We can pass that on to you guys, get everyone prepared. So that's the goal. Chart Addicts members, you guys are on the Zoom call. It's great to see every last one of you. Let me know how you guys like the call with Jacob, because I know I got Linda and Bryce in here. Linda, I know you're not a stranger to working with Jacob, because he has been around for a little bit. Max said fire. Bryce said love his breakdowns, dude. Super simple, like just incredible. Okay, YouTube, can you guys hear me? I got one response, so I'm guessing that we don't really have, like, is the connection good? What are we doing here? Move this just a little bit closer. Estes says yes. Umut says yes. Tyler says yes. What up from YouTube? All right, great to have you guys on. All right, well, welcome everybody. So the purpose of this stream is to prepare you guys for the Fed news this Wednesday. There's 8 Fed meetings during the year. So if you're a Forex trader, you have to understand how these high impact news events, impact the trades or the instruments that you're trading. So if you guys are trading any dollar pairs, tomorrow is going to be a very important day. And if you're Wednesday is going to be an important day. And if you're like, what a lot of traders tend to do is burn their chips early in the week, like on Monday, dig themselves a hole. And when the trades finally show themselves on Wednesday and there's a great opportunity, you don't have enough margin, you don't have enough money in your account in general to take that trade, or you're emotionally distressed because of the losses. So the most important thing that you guys realize is when there is high impact news events, you want to be very selective. Okay? If you guys understand that, put something in the chat. Put very selective in the chat. Very selective. A lot of people treat trading like a joke, and that's why not a lot of people are making consistent money. But the second that you start to take trading seriously, your results will show. And so the most important, and this is not even just for news days, this is honestly just all around. Imagine you only have 4 or 5 bullets in your gun. Imagine there's like a revolver. You only have 4 or 5. Would you go out there and pray and spray and close your eyes and just keep shooting at the wall? Or are you going to try to find very targeted opportunities that are very specific, and you're going to be highly selective to take advantage of those? Okay, I love you guys' participation tonight. Appreciate everybody chiming in. Good stuff. So that's the number one rule of news trading. Be very selective. You're going to be presented so many shorter time frame opportunities. You're going to be presented so many patterns that will entice you to either buy or sell prematurely. Your job is to understand that you only have 3 or 4 trades this week max. And every time you're presented an opportunity, a gambler thinks to himself, how much money can I make from this trade? Right? A risk manager or a real trader asks themselves, is this a trade I'm willing to lose money on? So when I'm taking trades this week, I'm like, okay, I only have 4 trades to take. Is this trade high probability enough for me to spend one of my attempts? And if the answer is no, and the probabilities are like, oh, we all been in those trades. It's like it could go our way, but more than likely it won't, right? It's not a very high probability trade, but we want it to do something. And so we take a chance on something that's not a high probability position. When you want to be highly selective, the most important thing is to kind of look at your confirmation strategy and make sure you only take trades that fit 100% of the confirmations. Sometimes it's 3 confirmations, sometimes it's 4 confirmations. If it's not all 5, you don't take the trade. I'm glad we got that out of the way. Second risk to trading during high impact news. If you're trading Forex, brokers have a free pass to manipulate markets during high impact news events. Okay? If you're trading with an unregulated broker, more than likely they're able to raise spreads. They're able to, increase. Well, really, the most dangerous thing is just spreads, and then the swaps, and slippage. So you enter a trade, you get executed somewhere way different than where you intended to enter, or the spreads are wide, so it's kind of close to your stop loss. It doesn't hit, but it's going to hit your stop loss regardless. And so there's all these different things that brokers can do. And when you contact your broker and say, hey, I was in this trade and this is what happened, they'll blame it on the high impact news, and they'll say that the liquidity provider is to blame for this. So if you guys are trading news, understand your broker has a free pass to fuck with your account. And so be very selective. The more trades you take, the more likely they are to be able to manipulate the trades. And so less is more. Put less is more in the chats if you guys are still on the same page as me. We're going to talk about the Fed news here in just a second. And it's very important to me that everyone understands how the Fed news is going to affect markets this Wednesday. This is going to be the single most important fundamental event of the entire year. If you're prepared, and this call is not about making sure you guys make money on Wednesday. What I would urge most people to do, and this is not financial advice, but what I would urge most people to do is to stay away from trading news. The reason that Wednesday's news is so important is because the Fed policy creates a trend in the markets for the next 2 or 3 or 4 months. The minimum trend that gets produced during a Fed meeting is until the next Fed meeting. And so whatever happens this Wednesday is going to create a trend until the May Fed meeting. So if we understand that the dollar is going to go bearish or the dollar is going to go bullish, for example, then we'll be able to trade along with that for the next 3 to 4 months. That's why it's so important to understand how fundamentals play into the markets. I don't want you guys to be news traders. Your goal is not to catch the spike and to catch a wick so you can take a screenshot and post it for your friends. Most people will lose money trading news. So what I would urge you to do is to understand how news affects the bigger picture, and then to trade along with that trend for the next 2-3 months with confidence. All right. 100% stay away until after news. There we go. All right. Thank you, Chart Addicts members. I'm looking at the Zoom call. Less is more. So Daniel, Binary. Oh, Ryan Goodman. Shout out to Ryan Goodman. Shout out to the Bored Ape Solana community. Nice seeing you on the call, bro. Yane says less is more. Linda says less is more. Josh says less is more. JD, Bianca, Yuri. Great to see everybody's participation today. Good stuff. Kevin Santo. Kevin, why are you on the YouTube and not the Zoom call, bro? Aren't you a Chart Addicts member? Dylan Castillo. Dylan, I've been seeing you on Instagram, bro. Hope everybody's doing good tonight. And I really hope that you guys are, like, this isn't going to be one of those calls that just like frustrates you and there's so much complicated information. I'm trying to make this as simple as possible because I understand how complicated these markets can be. And more importantly, whenever there's high risk news, the rumor machine, which is called the rumor mill on Wall Street and some of these big firms, they intentionally put out false information for the purpose of deceiving traders, for the purpose of creating clout, for the purpose of creating panic, for the purpose of creating uncertainty. So when you're watching Yahoo Finance or Bloomberg or CNBC and these mainstream publications, typically what you'll start to see is a consensus. The consensus is everyone wants to short. And then you're like, okay, well, if the smartest institutions in the world want to short, why don't I just do what they're doing? And then you start to realize, wait a second, every time the consensus is one way, the market goes the opposite way. So I'm going to give you guys my breakdown of what's going to happen with the Fed news. But I need to give you guys a breakdown of how we got here first. And the way I can do that is just by using TradingView, the #1 charting platform in the world for traders. Okay. All right, I'm going to give you guys an abstract, and then I'll show you guys real life examples from the charts. Got it? So I want to explain how we got to this specific point in time. 2020, we had a pandemic, correct? Markets crashed, stock markets went to shit, economy went to shit, supply and demand went to zero, which means nobody wanted stuff and nobody could make stuff. And it was the most drastic economic crash that we've ever seen in the history of financial markets. Now, without the money printing of the Fed, we would be in a very deep depression right now, and it would take us probably 3 to 4 more years to get out of it. But the Federal Reserve and the central banks can print money to get us out of almost any problem, and that's how we got here. So in 2020, we printed close to, I don't want to say printed, but $17 trillion was introduced into the economy. And I'll show you guys how drastic that was. 30% of the total supply of US dollars was printed in the past 2 years. No, some of you guys, a bunch of numbers got thrown out. You just blanked out. I'm going to say it again. 30% of all the dollars in circulation in the world were printed in the past 2 years, which means that you take the 75-year history of the US dollar standard since Bretton Woods, you take every single thing that's happened since then and all the money that's been introduced since that point, 30% of the total dollar supply was printed in the past couple of years. And so everyone's wondering why we have inflation so high and why are prices going so high? Well, we introduced a record amount of money into the system. Now, what happens when you introduce a record amount of money into the system? Consumers have more to spend. Businesses have more to spend, right? Banks have more to lend. Manufacturers have more to buy with. And really the most important thing is that consumers can spend more. And that leads to a chain reaction. Manufacturers make more stuff. Suppliers need more raw materials. It goes all the way up the chain. So economic activity speeds up whenever we introduce this much money. In 2021, we were starting to come out of the COVID pandemic and we were starting to come out of that crash, but the Federal Reserve made a very big mistake. Inflation had already started to show its face. We were around 4% in March or May of 2021. And instead of stopping the money printer, they continued through the summer. And they actually continued this until 2022, until the summer of 2022. It wasn't until June that we stopped printing money. So from 2020 to 2021, we were printing money. In the summer of 2021, we hit 5% inflation, which is a very, very high number. None of us have seen it in our lifetime. The last time we saw inflation this high was the 80s. Well, some of you guys are older than I am, so maybe you have seen this. But inflation hit 5%. This was the emergency mode. In the summer of 2021, the Fed should have stopped printing money and they should have realized that we were going to cause a crisis. But they continued for another 12 months of money printing until eventually we peaked out at about 9% inflation, a record high number. Now, in June of 2022, we started doing the opposite. So we stopped printing money into the economy. And then starting from June, we started to take out $100 billion every single month. So the Fed was actively removing $100 billion out of the economy every single month by taking or by putting the assets they had bought back into the economy and taking the cash out. How do they do that? They go to their member banks like JP Morgan, Wells Fargo, Citibank, and they say, you have to take these bullshit securities that are on our balance sheet. So here, take these stocks and bonds, give me back the cash. And JP Morgan's like, no, I want to keep the cash so I can keep lending it and making money. And the Fed says, too bad. We just took the money. So the Fed can force their member banks to take money or to take assets whenever they need to in order to stimulate the economy. And that's exactly what happened. So we've been taking $100 billion out per month this entire year till 2023. Now we get to where we are today. And I'm going to go to balance sheet, Fed. Boom. So now that we're all caught up, I want to show you guys how this affects the Federal Reserve and then how this is going to affect their decision-making on Wednesday. So this is the 2020 pandemic. We printed a shit ton of money. We introduced a lot of money into the system. And you guys can see the Fed's balance sheet went from 3.8 trillion up to $9 trillion. 3.8 to 9 trillion, more than double. If you guys look at the entire history of the Federal Reserve balance sheet, we have never even hit $1 trillion. The first time that we hit $1 trillion, I believe, was after the 2008 financial crisis. Obama had to kind of make some last minute decisions to fix the economy. So he ended up starting the TARP program and starting the first QE facility. And that's what led to a lot of this money introduction. We were steadily rising until we had this problem in 2019. And then the 2020 pandemic is where we printed a shit ton of money. So I've been telling you guys, the Fed is trying to take money out of the system. This is all they've been able to do. Like for the past 12 months, they're taking $100 billion out of the economy, and it's only this little blimp right here. It's literally inconsequential. Now we look at the annual perspective, $100 billion a month was being taken off of the Fed's balance sheet. And then what happened last week? In 1 week, the Fed printed $300 billion. So we just undid an entire quarter's worth of quantitative tightening in 1 week, printing $300 billion into the economy. Now, I want you guys to take a guess. What happens to stocks when the Fed prints $300 billion into the economy? What happens to stocks when the Fed prints money regardless, just in general? Will this be posted on your YouTube playlist? I hope so. But at the same time, I hope you're taking notes too, because this entire file could get corrupted and could get deleted. I'm very irresponsible with posting. So if you're not taking notes, then honestly, I just don't know what to tell you. If you think you're going to remember all this shit off the top of your head, good luck. All right, I'm looking at the Chart Addicts chat real quick. Did Biden and Congress send Ukraine $75 billion in support affect the U.S. economy? We'll talk about that in a second. JD says rally. Desic says fly. Mo says fly. Yep. You guys got this. Pretty straightforward stuff. Fed prints money, stocks go up. Side note, since I have you guys here, quick commercial. Chart Addicts, we're hosting the largest conference for traders, investors, and crypto lovers in June. FX Summit 2023 conference, June 9th to the 11th in Miami Beach, Florida. Make sure you guys grab your tickets, fxsummit2023.com. Again, fxsummit2023.com, the #1 conference for traders, investors, and crypto. Look forward to seeing all of you guys there. Side note. So we printed a shit ton of money. This is how we got to where we are today. So I'm going to walk you guys through the 3 different scenarios that can happen on Wednesday, and I'm going to highlight the one that I believe is the most likely. Whenever you're building a thesis about what's going to happen, whether it's a trade, whether it's a fundamental bias, whether it's a decision in your life, you always want to put out the options, because if you're only marrying one bias, you're going to be fucked in markets. You have to understand probability weighted decision making. You have a few options. Option 1 that can happen, option 2 that can happen, and option 3 that can happen. And your job over time is to build your intuition about the probability that you can assign each of these scenarios. What is the chance that each one of these plays out? Okay, so I'm going to give you guys 1, 2, and 3, and I'm going to assign a probability of each one of these scenarios playing out. The one with the higher probability of happening is the one that's most likely. So let's say this is a 60% chance of happening, this is 20, and this is 20. Okay, the first scenario, there's 3 camps here. Well, actually, I have to break this down I have to break down one last thing about how we got here. Then we're going to get to the prediction for the Wednesday. Okay. How we got here is the consensus going into this year was that the Federal Reserve was only going to do 2 rate hikes. That was JP Morgan's consensus. That was Morgan Stanley's consensus. That was Merrill's consensus, Goldman Sachs. Every piece of research that I was given, and in case you guys don't know, I used to be a wealth manager at Merrill Lynch, Bank of America, still have a ton of contacts in banking, and I'm always getting the latest updates and research. Bank of America's research team is top notch, and they aggregate a lot of research from JP Morgan and from Goldman and from Morgan and from Wells, and they're able to aggregate that data for us. So I'm looking at the consensus. The consensus was 2 rate hikes this year, 1 in January during the Fed meeting, and then 1 in Wednesday during the Fed meeting, 1 in March during the Fed meeting. What I believe is the Fed's course of action. Well, actually, this was true before the bank crisis. The bank crisis kind of threw a wrench in the shit. But now the new consensus is 4 to 5 rate hikes instead. 2 rate hikes was already priced in. The markets sell off a lot. They panic. And then they're like, okay, we got it out of our system. Now that they're raising rates, the markets are going bullish. Everyone's like, well, Roy, how are the stock markets going bullish if the Fed is raising rates? Because the markets are forward looking. They already made the decisions 4 or 5 months ago to short based on the idea that the Fed was going to raise rates twice. If the Fed starts to indicate 4 or 5 rate hikes and they're serious about this, the stock market needs to crash, absolutely crash. Because 4 or 5 rate hikes is going to completely destroy earnings for corporations. Keep in mind, the stock market indices are a conglomerate, or it is a, what do I say? It's a combination of all the corporate earnings of these different stocks. Like the stock market index is all the stock prices of these different companies weighted and then averaged out. And then how the stock price is determined is by earnings. So if the company is making more money, the stocks go up. If the company is making less money, stocks go down. In an environment where the Fed is fucking up the economy, companies make less money. If companies make less money, their stock price drops. If their stock price drops, the indices drop. So long story short, this is how the interest rates can directly affect the stock market and the corporate earnings and the performance of some of these stocks. So scenario 1 is that they're going to do exactly what I just said, 4 rate hikes. I got to type this out. This is going to be ridiculous. 4 rate hikes, which is going to lead to a recession. which is going to lead to quantitative easing. So if Jerome Powell indicates that they're going to continue to do 4 rate hikes on Wednesday, what's going to happen is he's going to actively send the economy into a recession in the next 2 to 3 months. Once we enter a recession, the Fed's going to have to step in and save the day. When the Fed steps in to save the day, they print money. And when they print money, you guys finish this off for me. What happens when the Fed prints money? Give me a few instruments, assets, or vehicles that we can take advantage of when the Fed comes in to save the day. Some of you guys may be confused. While you guys answer that, I'm going to show you something really quick. Put your answers up in the chat. What happens when the Fed starts printing money? What assets, instruments, or vehicles can we take advantage of in that time? But on the Chart Addicts website, this is free for everyone, so you don't have to be a member to access this. But you can go to services and go to analysis. And in the analysis, I've been writing about interest rate hikes and how they affect the economy for years. Let's go through fundamentals. If you guys haven't read, wait a second. Yeah, if you guys haven't read the 2023 market outlook, I highly recommend you guys check this out because everything's sort of playing out perfectly. Same with the dollar bullish, Fed's dilemma. All of these are super, super accurate, but I'm trying to find one specific article here. I said the Corona crash. So I wrote this in March of 2020. You guys can go do your own research about the timing of when this article was written and how accurate it was and how predictive it was. A lot of people like to look at my articles and be like, well, Roy, it's easy to put this shit out after this stuff happens because we all saw it. But it's I think it's a little bit more impressive to put things out months in advance before these things play out and to watch things play out over the next year and a half, which is kind of one of our strengths here at Chart Addicts. But there's something that I said that's very important. Nah, this is the wrong article. How to trade 2021. So in 2021, they did unlimited QE, so they printed way too much money. And I basically just give like breakdowns of every instrument specifically. So I did equities right here. Boom, boom, boom. Congress announcing fiscal stimulus would add fuel to the equity markets. That correlation has been seen since last year. If it happens and the markets continue to trend higher, then intraday trading will be most beneficial. Keep buying it up. The whole point was that in 2021, they were going to continue to do unlimited QE, printing as much money as needed in order to solve that existing crisis, which made NASDAQ, S&P, and US 30 absolutely fly. When you guys look at a correlation chart, and I don't know if you guys are, I want to say, like advanced enough, but if you guys understand how to do correlation charts and you guys can overlay the Fed's balance sheet with the S&P 500, I think that you guys are going to find the most profitable trade of the next 4 or 5 years. The S&P 500 is almost 97% correlated with the Fed's balance sheet. What that means is any changes to Fed balance sheet, means printing or taking money out, is going to have a direct effect on the stock market. So if you look at the Fed announcing something in advance and saying, hey, we're about to start printing money, in your mind, you should automatically go, where can I park my money so that I can take advantage of the flows once the money starts to go into that sector? And so this time around is going to be very similar. Once the Fed starts to print money, we're going to see stocks fly, and that's how we're going to take advantage of this next bullish run. He said, Bitcoin, baby. Yep. Fed prints money, stocks go up. Yep, yep. US 30 and GBP USD go up. Anything that reacts opposite of the dollar. So I'll be completely honest. The dollar is the one thing that everyone thinks that they're so sure about. They're like, oh, well, if the stocks are going up, the dollar has to go down. What you guys have to understand is that global investors are always looking for the safest place to park their money. And if that's the United States, they're going to park it in the stock market and in the US dollar. So there are scenarios where the dollar and the stock market can go up simultaneously. And that's actually the scenario that I'm expecting this year. Because all over the world, Japan is completely fucking their currency by overprinting it. They had to choose basically save the currency or save their bond market. And they chose to save their bond market and sacrifice the currency. Sacrificing the currency means they're going to continue to print it at rapid rates, and they're going to lower the interest rate to make it easy for people to borrow it, making that currency worthless. So if Japan is worthless, if the euro is worthless, not Japan, sorry, the Japanese yen. You're correct. I love the Japanese people. If the Japanese yen is worthless and the euro is worthless, where are investors going to park their money? The UK is on their third prime minister this year. Right? You're going to park your money in the UK with the Great British Pound? You're going to park your money in the Swiss National Bank after the Credit Suisse crisis? Where would you park your money internationally? So the safest place to park your money as a safe haven is still the United States. Whether that's the dollar, which is not a great place to hold your money because of inflation, but it's still better than Europe or Japan. Okay, so this is a scenario where we can see both. So scenario 1, 4 rate hikes this year. We go into a recession. Then the Fed comes in to save the day, and we start the next bull run. Scenario 2, 1 rate hike, 25 basis points this Wednesday. The effect of this rate hike that happens on Wednesday is going to be inflation goes up. If inflation goes up, the Fed's going to have to get very aggressive, and so they're going to have to raise rates aggressively. And if the Fed gets aggressive, we go into a recession. And then after the recession, QE. I'm going to put to the moon. People, I've been buying crypto since the last dip. This next bull run is going to be exactly what we need to have crypto push higher. And so I'm just waiting for the money printers to come back on so all of my assets can get absolutely flooded, and then I can make as much money as humanly possible off of this next bull run. If you position yourself effectively for the money to come in and flood, that's the best way to capture returns in an environment like this. And then scenario 3 is actually the Fed pivot scenario. They don't do a rate hike. They announce some rate cuts this year. Inflation explodes. Fed has to send us into recession. What's the common theme between these 3 scenarios, y'all? What's the common theme between these 3 scenarios? So the first one is 60%. The next one is 20% probability. The last one is 20% probability. What's the similarities that you guys are seeing between all these different scenarios? All right, Melissa says recession. Joseph says recession. And there it is, people. No matter how you spin this thing, we are more than likely going into a recession in 2023. Okay, that's how we can work through this thing, step by step. The most likely scenario, if I'll be completely honest, is somewhere in between these 2. So here's exactly what I believe is going to happen. I'll let you guys get off if you have somewhere to be, and then we'll kind of go through a bit more detail if you guys want to stay on for another 15, 20 minutes. But here's exactly what I'm expecting. 25 basis point hike Wednesday. I said Wednesday. 25 basis point hike on Wednesday. Very important that this Wednesday is all about the speech. The rate hike, I'm telling you guys right now, I'm willing to bet my kidney on this, that we're going to see the 25 basis point hike. If it wasn't for the banking crisis, he could have even gone 50 basis points. Like that's what Europe just did. Europe just kind of ripped the Band-Aid off. They just did a 50 basis point hike last week, right? Because they were so behind on the ball, they had to catch up. And so the Fed really, in this time around, should have done 50 basis points, but that would have panicked the markets. So they did 25 basis points. That's the most expected thing this Wednesday. The markets are going to fly if nothing else happens. The speech is the most important thing. If Jerome Powell indicates 4 rate hikes this year, so he's like, look, I get that there's a banking crisis or whatever, but I'm going to continue with my plan because getting inflation down is more important than whatever else you guys are talking about. And if he reiterates the original plan of 4 rate hikes this year, the stock market is going to dive and crash in a way that we've never seen before. If he even hints at this, the markets are going to absolutely fall off a cliff. Massive sells, thousands of points, smaller time frame retests, no higher time frame retests. If Jerome Powell, he's going to do the 25 basis points regardless, remember. But if he starts a rumor that they're going to start to do, I can't even spell, rate cuts, then the stock market is going to fly. Absolutely fly. When the Fed cuts rates, that's basically a very stimulative measure. It indicates that what happens after you cut rates is printing money. They both kind of go hand in hand. So all of the smart investors are kind of anticipating the Fed printing money, and they're like, yo, they're talking about cutting rates 200 basis points this year. And so everyone's going to start to position themselves into risk assets, and risk assets such as crypto, gold, and stocks are going to see a massive rally. This is the bearish and bullish scenario. So I'll give you guys a quick little secret. I'm looking for buys this Wednesday on the stock market index. Take it easy if you guys got to go. Barring any bad news from Powell, I will be buying on Wednesday. If Powell indicates the 4 rate hikes and he continues to stay strong on his path and strong in the language that he's using, then the buys are no longer valid. And instead, I will look for some kind of short opportunity after the spike. There will be a spike. It's the Powell spike. Okay, Chart Addicts members, you guys know this. We'll be doing this in real time so that we get to continuously build our understanding of news events and build our patience, discipline, and aptitude and flexibility when trading these high-risk news events. All right, y'all. Recession, then QE. Smart. Recession is going to happen no matter what. Yep. So does that mean the dollar is bullish then? Chris, what are you doing on YouTube, bro? Why are all these Chart Addicts members on the YouTube and not in the Zoom call, bro? It is baffling to me. Aren't we already in a recession technically? No, not even close. A recession requires us to have a weak labor market, so people losing jobs. It requires us to have low economic activity, and it requires us to have negative GDP quarter after quarter after quarter. Now, GDP is still fairly stable. It's not strong, but it's still stable. And the labor market is at record lows. So if I show you guys unemployment real quick. This says, what website is this? This is the Federal Reserve Economic Data website, the St. Louis Fed Economic Data website. Hold on, this thing is blocking it. No, I'm on Fed Research right now. Oh, I'm on the wrong website. Federal Reserve Economic Data, the St. Louis Fed website. Okay, this is where I get most of my US data from, because it's directly the information that the Fed uses and most economists use in order to make assumptions about the markets. So over here, we have the unemployment rate. I want to show you guys why we're not in a recession, because I thought that we were in a recession for a long time. And if you guys look through my articles, I even called a recession last year because in my mind, I thought that the Fed was going to be more aggressive. I said 2022 recession, the full picture. And I was genuinely expecting some sort of recession last year. It never happened. We got a technical recession of 2 consecutive quarters of negative GDP, but labor being strong, there's no way to have a recession when everyone has a job. If you and all your friends still have jobs, you can still go spend money at the store. You can still pay your taxes. You can still hire people if you're a business. You can still, borrow money and do all these different things. And so labor markets is a very, very important indicator for me of whether or not we're getting into a recession. But let's look at this. The last time that we saw unemployment rate this low was in 1980. Where are we at? Where's 1980? No, it wasn't even 1980. It was 1970. So it's over 43 years ago. That was the last time we saw these record lows. Under Trump, I remember that we had record low unemployment, which was really good. And then COVID happened, a massive spike. This is the highest unemployment rate we've ever seen because obviously the economy was shut down, 15% unemployment. And if you guys look at where we are now, we hit 3.4. But in the past month, we've ticked up from 3.4 up to 3.6. So what the story is telling us is COVID fucked up the entire economy. Since COVID, we've basically gotten into a very healthy place regarding employment, regarding how many people in America have a job. And because of that strong labor market, we're technically not in a danger of an immediate recession. And we're still at these record lows. Now, we're always at record lows before we're not. So if you guys look at all these dips, it typically is right before we see that crash. All the gray bars are recessions in the US business cycle. So we have the 2008 recession right here, the 2020 recession right here, 2001 dot-com bubble right here. So right before the dot-com bubble, we had low unemployment at 3.9%. Then the market shot up, or the unemployment number shot up. Right before the 08 crisis, we had record low unemployment, 4%. And then boom, right after the crisis, up to 10% unemployment. Then we had record low unemployment. And then COVID happened, massive. Right now, we're at record low unemployment. Could we sustain this for 2-3 years, whatever it might be? Yes. But at some point, this is going to start to tick back up. And that's going to be our measure of whether or not we're in a recession. So if you guys are looking for a key metric to watch for, a key performance metric to watch for to gauge whether we're getting closer or further away from a recession, the number one metric for me is the unemployment rate. Then you guys can look at GDP. You can also look at corporate earnings. You can look at consumer spending. And those different things will also paint a very holistic picture of whether or not we're in a recession or not. Or you can just go to the NBER website and they track the American business cycle and they'll tell us, hey, we're in a recession, or hey, we're not in a recession. So you guys can just go to the National Bureau of Economic Research and they'll have all the data that you need. Business cycle dating. Talk to me. Where are we at in the overall business cycle? It's pretty embarrassing. Whenever I try to find something on the website and I have to dig around a little bit, that's why I should probably have all this stuff done in advance. But if I was that organized, people, I'd pray for everybody. Pray for everyone I'm doing business. Pray for everything. Pray for the markets. If I was that organized, damn. Learned so much today, Roy. Thank you for sure. This is what we're here for. What time is news coming? Carlos, that's a Google type question. Never ask me a question you can ask Google. You mean the DXY is going to drop this Wednesday? In the short term, yes. But it depends on what the Fed says. If the Fed doesn't say anything inflammatory and everything goes according to plan, the dollar will drop a little bit. No, sorry. Rate hike. Rate hikes, bullish for the dollar. My bad. Guys, it's been a long fucking day. I just got back from the gym. Best workout of my entire life. Kind of brain dead. But bear with me here. If the Fed raises rates, that's bullish for the dollar. Because whenever you take supply out of the market, whenever you make something more scarce and everybody still wants it, the price of it goes up. So the dollar going bullish is in direct relationship to the scarcity that the Fed is going to implement on Wednesday. If the Fed does a 25 basis point hike, that creates more scarcity in the market, more scarcity for supply, and that's going to make the dollar go bullish. All right. Just how it is. Would 50 basis point hikes save us from a recession? 50 basis point hike would send us into an immediate recession, but the recession would be short and sweet. That's a really good question. It's guys, okay, imagine you have a Band-Aid on. Imagine you got a Band-Aid on and we have to rip this shit off. And you're just like pussying around it. And now it's getting infected. And now there's some sort of complications there. And now it's like swelling and there's all this different shit under there. The sooner you rip the Band-Aid off and you start to put the alcohol and you disinfect, you might get sick for a week because it's infected. But the sooner you do that, the better. The Fed not raising rates aggressively enough is the equivalent of them not ripping the Band-Aid off. There's an infection under the Band-Aid and they're literally waiting until they have to amputate the fucking arm at this point. And so the Fed's equivalent, or the equivalent for the Fed, this example, is if the Fed raises rates aggressively for 50 basis points, we can get this thing done quick. We'll rip the Band-Aid off. Putting the alcohol is going to fucking burn. It's going to hurt. It's not going to be fun, but we're going to be able to move on. If the Fed continues to tiptoe around it and just scratch off just a little bit and put it back on, scratch off just a little bit and put it back on, we're going to have to amputate the arm. And that's not something that we want to do. And the Fed's like, fuck it. We'll amputate the arm. We'll just put a fucking prosthetic instead. We don't want a prosthetic. right? Rip the fucking Band-Aid off. Put the alcohol, give me the antibiotics. Let's get this show on the road. The Fed's like, but if we rip the Band-Aid off, the patient's going to be mad. And if the patient's mad, they're going to punch the doctor. And the doctor doesn't want to get punched. The doctor doesn't want to get blamed. The doctors want to be in trouble. So Jerome Powell, if you listening to this, first, I have a tremendous amount of respect for your position. I understand how difficult your job is. So let me say this and preface that. Second, get as aggressive as you can as soon as possible so that we can rip this Band-Aid off. If we continue to tiptoe around this, the recession will be 10 times worse, and the Fed's going to have to print a shit ton of money in order to solve the problem, and it's going to further exacerbate the inflation crisis that we have, and now we're back to square one. All right? So in order to avoid the recession QE scenario, we're going to have to get very aggressive, and the Fed needs to understand that as soon as possible. But if you're in that position, no one wants to be the Fed chairman that crashed the markets. No one wants to be the Fed chairman that ruined the economy. No one wants to be the Fed chairman that gets blamed for one of the worst economic crises. So I understand why he's not going that aggressive. But buddy, you're halfway out the fucking door. If there's any time to get aggressive and for history to look, to look at you in a positive light and with a light of respect, you're going to have to fucking suck it up and be a man. That's what I'm going to say. Now, obviously, guys, I'm not in that position, so I can't sit here and say what should or shouldn't happen. But in my honest opinion, you can't be scared of what people are going to say or crashing the economy or whatever it is if you're in this position. You really, really have to understand the mechanics of how this stuff works and realize that if you don't act fast enough, you're going to end up screwing the economy even worse. The problem with the Fed is that they can turn on the money printer and push the problem off for 7 years. What happens after 7 years? Powell's no longer fucking chairman. It's the next Fed chairman's problem then, which is what Bernanke did in 2008, which is what Yellen did in 2012, which is what Powell did before, and which is what Powell is doing now. Kick the can down the road and let the next Fed chairman deal with it. So personally, I think that the Fed eventually has to reckon with the fact of how big they've created this bubble and how every single time we have a crisis, they print more money. And they've continued to expand how big this crisis is. And at some point when it pops, it's all going to come crashing down. So we either do that sooner or we literally kick the can again. And there's a very good chance that Jerome Powell kicks the can again on Wednesday, which is what we're watching for the markets to fly bullish. Because if he kicks the can down the road, starts printing money and to save the day and he's the hero, stocks are going to fly, assets are going to fly, housing prices are going to fly, car market's going to fly, gold is going to fly, Bitcoin is going to fly. We're going to get rich off of that. So if you own assets, you'll be able to take advantage of the asset inflation. But if you're just a consumer and you don't own assets, the prices at the grocery store are going to start to crush you. The prices at the gas station might crush you. The prices of ordering food and all these other things are going to crush. So let's talk about recession. This is the last thing I'm going to say. And then if you guys want to hop on for extra credit, I'll talk about the bank crisis. As a consumer in a recession, the most important thing is to not take on more debt than you can handle. The reason for that is whenever there's an emergency, let's say that you and your spouse lose your jobs, or only one of you lose your jobs, the other one is still working. You want to have a line of credit that you can dig into for the month that you're looking for alternative employment, or maybe 1 or 2 months that you're stuck at home. You need to be able to buy groceries for your family, et cetera, et cetera. If you're over leveraged in terms of credit, you have a huge credit bill that you haven't taken care of, et cetera, it's going to come back to bite you in the ass when you actually need it. So right now, the storm is still clear. It's the calm before the storm. Use this time to get your financial life right so that you guys can weather the storm. So first things first, as a consumer, don't take on more consumer debt than is reasonable in this time. Make sure that you're living below your means and make sure that you guys are stashing away cash to take advantage of this dip. Okay? He or she who has cash in a recession is king. Cash is trash until the markets are about to crash, which is right now. So as a consumer, that's what you do. As an investor, your job is to hold cash as long as possible and to wait for the best opportunities. You don't know what's going to crash first. People ask me, Roy, is the housing market going to take a hit? Roy, is the stock market going to crash first? Is Bitcoin going to crash? I wish I knew, because if I knew, I'd put short positions, I'd put leveraged short positions on all those assets, milk it on the way down, take all my riches from shorting these markets and buy the assets at the dip, if I knew which ones were going to crash when. But since we don't know, what I do is I hold cash, I wait for the crash. Rich people who are over leveraged have to give back all their assets into the game. And new investors such as us can take cash and go in there and buy these assets. Whether it's fucking baseball cards, crypto, stocks, maybe you've always wanted to buy that one airline stock and it was always too expensive. Boom, the crash happens, you can buy it. You've always wanted to buy Apple stock. The crash happens, boom, now you can afford it. You've always wanted to buy Bitcoin. Then it went down to 10K, boom, now you can buy it. So cash is trash until the markets are about to crash. Very important as an investor. This is not financial advice. Please make sure to consult a licensed financial professional. Damn it, ladies and gentlemen, welcome to the Chart Addicts live streams. It's great to see every single last one of you guys. If you're on YouTube, we will be live streaming on Thursday at 9 a.m. Eastern time. We did 100 weeks straight of streams from 2020 to 2022. And then I said, fuck it. But now I'm back because it's Chart Addicts, not Chart. I'm kind of in this. It's Chart Addicts, and we're back on Thursday, 9 a.m. Eastern time. I'll see every single last one of you heathens there. We're going to be making money. Everyone who has an excuse that you guys can't afford to come to the summit. Roy, the tickets are expensive. The flights are expensive. The hotels are expensive. Get on the Thursday streams and make money. You have zero excuse. If you are willing to get on those streams, you will make money with us, and you'll be able to come to the summit just like everybody else. So again, fxsummit2023.com in case you guys want to come and learn from some of the best traders, investors, and crypto enthusiasts and developers in the world. Event schedule, post-conference events, VIP, everything is going to be here. It's an unforgettable 3-day weekend filled with experiences, supercars, knowledge, workshops, real in-depth collaboration, and networking. So I'm looking forward to seeing every last trader there. If you guys are on YouTube, thank you for stopping by. Great to see every single one of you. Peace. All right, if you guys want to stay on, what I'm going to do is break down the banking situation real quick, and we can move on to the next step. Kind of just call it a night. He said, oh man, the YouTube live streams are back. Oh yeah. He said, I love those. It's free money. I mean, Roy, what do you think of BRICS taking over in the future? Kanye is going to become president before BRICS takes over. That's my prediction. I'd bet on Kanye becoming president before I bet on BRICS taking over. When's the last time you bought anything in fucking yuan or renminbi? Which one of you guys is out here fucking converting your money to Russian rubles so you can buy shit? No one. Nobody. Can any of you guys even point to where some of these countries are on the map? No. 80% of global trade is settled in US dollars. If you want to unwind that system, you're going to have to break a lot of fucking eggs along the way. And who's willing to do that? Because the US is willing to go to war to protect these eggs. If you think they want to sell oil in some local currency that's like monopoly money, like the renminbi, that nobody else in the world is going to accept, so it's literally bullshit money, and that's going to take over the US, the real discussion here is China's GDP is going to outgrow the US, and so they're going to have more say on the global stage. But that doesn't mean they're going to have the global reserve currency. The US spends more on military than the rest of the world combined. If you guys don't think that the US is willing to protect our sovereignty and the currency system that we have with all the warships, tanks, fighter jets, and everything that we've built, you guys don't understand why America is the way it is. You don't become the global superpower by getting walked on. And America's here to stay, guys. I'm just letting you guys know. I love the idea of like, oh my God, there's another superpower here and they're competing with the US. And I've read Ray Dalio's book, and I even talked to the Ray Dalio's head of investments, Bob Elliott, and we've had very intense discussions about the China situation. But in my humble opinion, the Chinese culture is not the same as the US culture. Let's say that the Chinese GDP grows double what the US is. What does that even mean? For us, standard of living in the United States is the single most important metric. In America, we have enough food, water, and energy for every citizen. When you look at some of these developing countries or some of these adversarial countries that are now developed, like China, they don't have enough food, water, and energy. So for us, I really feel like standard of living needs to be the key metric. And even if their GDP grows, because yes, they have 1.4 billion people, their productivity and the overall production of the economy better fucking be higher. But does that mean that they're going to take over? No. Again, when was the last time anyone spent anything in fucking rupees? The fuck? Come on, yo. I went to fucking third world countries. Everyone takes dollars. Everyone. There's an exchange rate head. Oh, they fucking love dollars overseas. Imagine somebody bringing a renminbi here and people losing their minds like, oh my God, I'll take that. I'll take the monopoly money. Fuck out of here. Roy's the truth. Guy's always dropping gems. Just think it goes through most people's head. Roger, let's be completely honest, bro. If whoever is still paying attention right now, you're in the top 1%. I'm just going to be real. It's Monday night. And you're listening to me talk about Fed news and Fed policy and all this shit. If you're still on this call, excuse me, you're in that top 1% of people who are dedicated to this skill set and dedicated in the long term to becoming a successful trader. So kudos to everybody. Before you guys leave, I know there's 130 something people on YouTube. Drop a like real quick. I'm going to sit here and fucking stare at you until you drop a like real quick. Because it only takes 2 seconds and it would be highly appreciated and it would go a long way and the algo will boost it to more people. And instead of fucking scammers and fucking scammer traders and fucking Photoshop traders and bullshit broker 15 pip bullshit wannabe traders on YouTube and fucking IML dropouts and fucking, prop firm fake profits ass traders. Is that what you guys want YouTube to push, or do you guys want them to push solid information? That's just what I think. So if you guys have enjoyed this call, or if you guys have learned it, even a fucking ounce from this call, even one thing from this call, please drop a like. It would mean the world to us. And I appreciate every single last one of you guys. Let's talk about the banking crisis. Then we'll call it a night. What broker do you use? FX Sway. There's not even a question, not even close. I've just recently moved all my money from unregulated brokers over to FX Sway. If you're not using FX Sway, please understand the risk of dealing with unregulated brokerages and understand that having your money there is not safe. Okay? I just put the link to the broker I use in the bottom. Just want to give you guys a heads up. Okay. So it's a regulated broker that also allows 1 to 500 leverage. So the best of both worlds. They're licensed by an authority that's not some fucking third world island where the main dish is fucking dirt. And but it's also not a fully regulated, platform where you are only allowed 1 to 50 leverage. So they still allow 1 to 400, 1 to 500, but they're regulated by the Australian authorities, not some fucking 2 guys with sticks like fucking trying to rub them together. Be like, I don't want to shit on any specific names because I don't, we ain't about to sit here and do all that. But if you guys are using some of these unregulated brokers that we've all heard before, you guys have mentioned a few, it's like, who the fuck is the regulator for that shit? It's literally one guy just sitting there with the fucking stick and the other guy just, and these 2 guys just sit there in a room and they get paid and boom, that's a broker. Which is really how, I used to trade on fucking Hugo's Way. Now, I want to preface the fact that I appreciate Hugo's Way for always being timely with the payouts. They really did they were the foundation for me, and I did have massive payouts, and there was a few moments where my stops got ran, and they made it right, and they refunded me the money, and they did everything right. The customer service was always on point, and so I want to give them some credit there. But at the same time, what the fuck, dude? Look at where these brokers are registered. I've been to those islands. There ain't shit there. So make sure that you guys are being mindful. I'm not telling you guys what broker to use because I don't give a fuck. What I am telling you is if you're using one of these unregulated brokers, understand that on any given day, the regulator can come and knock on the door and shut down the whole fucking thing, and your money is gone forever. Because when you put your money in a brokerage account, you are now a creditor to the broker. And as a creditor, you don't get paid out when the company goes under because you lent them the money. So, yeah, Sway is the way. FX Sway is the way. What happened to Ted's broker? Brother, that's a conversation for a different stream. Can you explain what off quotes means? No. He said, damn, bro, not the sticks. D-Hawk. What's up, brother? Good to see you, fam. I hope you've been doing good. Everybody hit that like button. We got 140 people on the YouTube, but only 91 likes. Somebody, Sway, please make it make sense. How, Sway? How is there 140 people left on the call, but only 91 likes? Let's get up to 100 likes, and I'll break down the banking crisis, and then we can go ahead and hop off. Fed news, you guys already got. We went down the scenarios. We went through the probability-weighted decision-making. You guys know exactly what to expect on Wednesday. It's pretty straightforward. But let's talk about the banking crisis real quick. Silicon Valley Bank, Credit Suisse, what's to come, recession's on the way. Make sure that we get, okay, we just hit 100 likes, and now we're good. Cool. Roy from India, how do I start learning? Okay, well, Ishan, I'm going to be honest with you. The Indian authorities don't allow you to trade international markets. Fair enough. So are there brokers that will give you access to the global financial markets? The answer is yes. Can I, in good faith, promote any of them to you? No. But are there brokers that allow you to trade from India? You know what I'm saying? You know what I'm saying? I'm going to have the Indian authorities send me a cease and desist. It's going to be five pages of Hindi, and the last page is just Punjabi. Just for good measure. He said, I really like the web trader on Sway. Bro, game changer. You can go directly to the broker backend and trade on a TradingView simulation. So you don't have to keep going from MetaTrader to TradingView to the broker. You can have it all in one platform. And I think that's just super, super clutch. Is that the real @Tory Trades? I believe so. Welcome, welcome, welcome. If you're not at the FX Summit, then where you at? Yeah. Okay, let's talk about banking crisis, then we can hop off. So in the past week, Silicon Valley Bank went under. Just to kind of preface this, the way that all financial institutions work, especially banks and brokerages, when everyone tries to pull their money out at the same time, the system collapses. It doesn't matter how healthy the system is, because when you give your money to any of these platforms, they're being productive with these funds. They're going to take your money and then they're going to perform lending activities. So the money's now in motion. They're going to take some of this money, they're going to put it in their FX reserves. They're going to take some of this money and they're going to maybe put some at the Fed and earn yield. And so they're constantly using our deposits in order to generate revenue and to generate income. So when all that money is in play and everyone tries to pull their money out at the same time, what these banks have to do is go and sell out of those assets in order to get into, or in order to make everybody whole, in order to meet the demands of the depositors. What happened with Silicon Valley Bank is something called duration mismatch, which basically means they were planning on holding these bonds for 5 years. And if you hold them for 5 years, you're going to make your money plus the interest. Okay. Now they're in the middle of this trade and they're in hella drawdown because the Fed raising interest rates has crushed a lot of these short duration bonds. And it's kind of just made a lot of these things, I don't want to say worthless, but they're all in negatives. So you're holding a trade in drawdown and the person who gave you the money for the fund starts to pull their money out in the middle of the drawdown trade. So instead of you being able to wait for the market to recover, you basically have to sell out in a loss. You have to close the trade in a loss to be able to give everybody their money back. So what happened with Silicon Valley Bank is they're in the middle of this trade with all these bonds. They're hoping to hold it for 5 years. The Federal Reserve has started raising interest rates. And so the value of those bonds is in the dirt. So they're holding a massive unrealized loss. And then as soon as people realized what was happening, they tried to pull their money out at the same time. So I just told you guys that if everyone tries to pull their money out of a financial institution at the same time, regardless of how healthy it is, it's going to crash that institution. In this case, the institution was not healthy. So they're in a situation where they're getting crushed with these interest rates, and then people start to pull their money out because they realize that they're in a negative position, and then they have to sell these bonds at a loss in order to meet the depositors' demands. And because they just took a massive loss and they realized that loss, the bank completely collapsed. So you're like, well, Roy, that's one bank. What's the big deal? How deep does this go? I don't want to be like an alarmist because I'm not like one of these like the Chicken Little fucking the sky is falling type of people. I have a lot of friends that are just bearish as fuck all the time, and they're always looking for any reason to short the markets. I'm not one of those. But when I say that this duration mismatch problem could collapse the global economy in a very, very serious way, I mean that wholeheartedly. If you look at the biggest danger with a duration mismatch, it's pensions. Pensions hold a lot of these same bonds. Now, if they hold them to maturity, they get to come out in a win. They have profits. They get to make back their original money they bought the bond with, and they get to make the profit on top. Now, what happens when a lot of pensioners start trying to take their money out at the same time? Like, these institutions are going to have to sell out at a loss in order to make everyone whole. And that's going to cause a bank run, and it's going to cause a massive ripple effect and a massive collapse. All right. So duration mismatch, very dangerous stuff. Silicon Valley Bank fucked up badly, because anyone that runs a bank should have quantitative analysts looking at duration and having a real-time feedback on how the duration is being impacted. And if the duration is getting fucked up and the Fed raising rates is fucking with the value of your bonds, you have an obligation as a risk manager, as a fund manager, to hedge yourself out of that risk. So how do you hedge yourself out of a risk of 5-year bonds? Like, guys, I'm a fucking nobody. I'm just on a screen here, and even I could figure this shit out. So I don't know what the fuck Silicon Valley Bank was doing, but there was definitely something illegal happening there in order for them to be this reckless. But if you're trying to fix the duration problem, you can buy shorter duration bonds in order to hedge the exposure to that longer duration bond. So thank you for helping me put my wife on to how the Fed works, always dropping gems. Well, first off, I think it's absolutely incredible that both of you guys are on the call together. I think that couples that learn financial literacy together stay together. So really happy to see that. Is it too late for government bonds? Not sure if you saw China and Russia presidents meeting this weekend announcing a new era. If we lose US oil peg, doesn't that make the default claims? Diego, did you not pay attention when I said that it ain't fucking happening, bro? Did you miss the part where I said that the renminbi is monopoly money? I mean this shit, guys. Who the fuck has ever spent anything in Russian rubles? I couldn't tell you what the color of a Russian ruble is. I couldn't tell you. I couldn't tell you who the fuck is on a renminbi. I have never seen one in person. And I wouldn't say that I'm like, I'm closed off. I'm a very well-traveled person. But everywhere, at any time, at any place, will always accept dollars. Now imagine shifting that entire culture. You might be able to get 1 or 2 countries to start trading oil together. You know what America would do if I was, a political advisor to the president? I would say let them trade oil and put sanctions. Anyone that does business with Russia or China is on the blacklist. You can no longer do business with anyone else in the world. And now there's an embargo on all the things that you want to export. France exports wine. Imagine we start taxing their wine import or their wine exports, and it crushes their economy. Germany is the largest economy in Europe. Their biggest export is cars. Imagine we start taxing the car imports into America on a very, very aggressive level because they're doing business with Russia. This is the type of shit Trump would have done, if I'm going to be completely honest. We don't need physical war. We don't need to go to war in fucking Ukraine, and we don't need to, waste American lives. What we need to do is economically squeeze these countries if they decide to be adversarial. And then by doing that, we can basically make them unattractive to do business with. When you make it unattractive to do business with them, people are not going to take the risk. Europe is damn near in a recession. You think they're going to go out there and step on toes just to fucking get cheaper oil by $1 a barrel? Fuck out of here. So that's the beauty of having the global reserve status, is that you're able to push your weight around. And after studying a lot of different global reserve statuses and a lot of different global reserve currencies, I'm realizing that America is the most benevolent global leader that we've seen in the past probably 300 years. And who's to say that China is not going to fucking dick everyone around? Everyone's like, well, maybe America shouldn't be the global superpower anymore because they've done all this stuff. Who's to say that Russia and China won't be 10 times worse? You don't think they would have invaded Afghanistan? You don't think they would have, kicked out a North African leader for trading oil in their local currency? They would do all that shit plus more. And so this is kind of the conversation of the next decade. I'm still green to econ. Is there a 100-year cycle? 75-year cycle. That's the currency cycle of the global reserve status. So Portugal was right before, the Dutch was right before this. And then it was England. And then it was Portugal. And then I believe it was Spain. Portugal and Spain might be switched. But every 75 to 100 years, there's a new currency regime that comes in. They take over the world. Typically, those currency regimes are based on military. They're based on technology. And then that's basically it. Military and technology. The Portuguese and the Spanish had the most advanced navies. Then they kind of discovered navigation. That gave them a huge advantage. They were able to just basically go around the world, and that gave them a massive advantage. Then you look at the British. The British owned all the trade routes, which made them the global superpower. The Dutch again. And then America, we had the Industrial Revolution, which helped a ton. We won World War I, World War II, which helped us a ton. And then now we are the technological powerhouse of the world. We have the global reserve currency of the world. And that's why we're going to remain the global currency for a while. My boy said, sell GU. Ricks. Okay. Said, yeah, it's called Bitcoin. You need to come to Nigeria, Roy. You are a rare gem. Bro, I love my Nigerian people. I'm going to let you guys know this right now. I've been wanting to go to Nigeria for so fucking long. I love Nigerian music. I love Nigerian food. Nigerian women. So I'm with it. If we can organize some kind of global tour and head all over the world, I am more than happy. If you guys will give me a warm welcome over there in Nigeria, I'm more than happy. Yeah, I'm an annoying tourist, but I'll be playing Burna Boy when I walk in. Everyone's going to be like, what the fuck? So yeah. All right, everybody. Peace. Take it easy. Fuck off. Go do something. If you guys have questions, you can hang out here. We'll just go through questions or whatever. What else am I going to do, y'all? I'm going to get back to emails. I'm going to get back to like work that I don't want to do. So I'd rather be on this stream kicking shit, at least teaching y'all something, going through some important topics. Yeah, and if you guys are still on here, if you guys wouldn't mind, boom, take out your phone. Let me show you guys how to do this. Boom, this is called a cellular device. Boom, open up Instagram. Boom, I am on the IG story. You guys can't see it because I got the fucking filter or whatever. Okay, I'm on the IG story. You guys ready for this? Click, boom, that's a picture. I'm going to tag at Chart Addicts in this picture. See, it auto completed it for me. I didn't have to type in the full thing, and then boom, post it on the story. Just like that. Wow. If you guys are on this call, if you guys wouldn't mind giving us a quick shout out, it'd be greatly appreciated. Thank you so much. All right, y'all. The New York City vlog has just dropped. Oh, ladies and gentlemen, if you guys like right after this, as soon as we're done with the stream, go and check out the brand new video that we did. We went on a countrywide tour. We hit all the biggest cities in America. We hit Atlanta, New York, DC, Phoenix, Dallas, Miami. And we did a workshop, a free workshop. We had 150 people in each city. It was absolutely incredible. If you guys are interested in kind of getting a recap of that tour, go and check it out. It's right here. You guys can also see the Atlanta workshop that we did. So Atlanta workshop is right here. The New York workshop is right here. We're going to post one for DC. We're going to post one for Phoenix. And we're going to post one for Dallas. I'll see every single last one of you guys at the FX Summit 2023 conference in Miami. If you guys are looking to level up your game, if you guys are looking to get surrounded by some of the most successful names in the space, fxsummit2023.com. I once tipped a maid in the Dominican Republic Canadian money and came back to the room with the money still in the drawer. Hey, yo. That's crazy. You tip somebody and they don't even accept the tip because it's not and that's Canada. It's not even fucking Russia and China. Do you think Biden will implement sanctions or embargoes? Where the fuck is Biden? Who the fuck is Biden? Yeah, I better stop asking me about some Biden, bro. That man is not he is not running the show. His political advisors are absolutely stupid. His entire political advising staff is absolutely, and it's not even stupid. I would say it's criminal. Because these guys are doing shit that's not in the best interest of America. Who the fuck's idea was it to send $100 billion to Ukraine? Who the fuck authorized this? In the middle of a banking crisis, in the middle of a fucking an inflation crisis, in the middle of recession risks, send $100 billion to fucking Ukraine? I'll give somebody $100 right now if you guys can point Ukraine out on a map. Fuck, we're on the internet. You guys looking this shit up right now. Can't nobody off the top of their head find where Ukraine is on the map. I guess it's close to Russia. You'd be right. People in fucking Ukraine don't even know where they are. They're like, oh shit, I thought this was Russia this whole time. Ridiculousness. This is real shit, people. I'm just telling you guys how it is. This is real shit. All right, hop off this if you guys wouldn't mind. Go through, check out the New York City video. Drop a like. Great to see all of you guys. Chart Addicts members Wednesday. We're making tons of money. Tomorrow, only one trade. Be highly selective. Don't waste your money before the big day, and now you're gassed and you can't take advantage of all the fun. Save your ammo. Be highly selective. Let's get ready for the Wednesday trading news. It's great to see all of you guys on the stream on a Monday night. Happy and safe trading. Peace.
Peace.
Peace. Okay, YouTube stream.